Good day, everyone. We are from the team of Dream Venture. Today, would like to do a special presentation for a subject of corporate finance under the guidance of Professor Cheram. Here, I would like to introduce my group member, Mr. Subra, YB Ravi, me myself, Mona, and Kaleji.
The financial performance of Maya Sinan Bahar may be assessed using numerous ratios. The purpose of this study is to analyze the estimated ratio for the current and prior years and highlight the relevant issues for consideration. The operational profit margin, sales revenue to capital employed, assets turnover, return on capital employed, ROCE, current ratio, acid test ratio, and debtors turnover are among the ratio examined. Operating profit margin. The current fiscal year's operational profit margin is 7%, a considerable decline from 14% the previous year. This decrease reflects a reduced ability to produce revenues from operation. To establish the cause of this reduction, we need to do some further investigation so that we can assess the success of the company's pricing strategies and cost cutting. Sales revenue to capital employed, asset turnover. The sales revenue to capital employed ratio shows how well a firm uses its capital to create sales revenue. Return on capital employed, ROCE. The ROCE assesses a company's profitability in relation to its capital employed. The current year's ROCE for Maya Sdn Bhd is 20%, a considerable decline from the previous year's ratio for 35.2%. This drop in ROCE raises questions about the company capacity to deliver adequate returns on invested capital. Further investigation is necessary to understand the variable behind this reduction and assess the company overall profitability. Liquidity ratios. A current ratio. This previous year, current ratio was 1.50, whereas this year's is 1.00. This reduction shows that the company's capacity to satisfy its short-term obligation may be deterioration. It is critical to evaluate the company's liquidity status and capacity to properly handle short-term financial obligation. B. Acid test ratio. By eliminating inventory from current asset, the acid test ratio gives a stricter measure of liquidity. The present year's ratio of 0.6 is considerably lower than the prior year's ratio of 1.2. This means that the company's capacity to pay urgent responsibilities without depending on inventories by be tested. It is critical to analyze the cause of this drop and evaluate the company's short-term liquidity positions. Debtors turnover. The debtor turnover ratio assesses a company's ability to recover payments from its borrowers. The conclusion is, according to the ratio study, Maya Sdn Bhd performed inconsistently in several areas while the company's sales revenue to capital employed ratio has decreased. Its operational profit margin, return on capital employed, and liquidity ratio has decreased. Concerns regarding the company cash flow management are also raised by the huge increase in debtor turnover days. More research is required to determine the underlying reason of these changes and devise methods to address the areas of concern. Thank you very much.
We may use the following plausible assumption when generating planning assumption for Tama Berhad's statement of financial position, balance sheet, line items, taking into account the predicted 20% growth in sales and the shift in payment terms. Cash. Given that about half of the new business would be paid in cash, we anticipate that the cash balance will rise proportionately to the increase in sales. As a result, we should expect a 20% rise in the cash balance to accommodate cash payment from new consumers. Accounts payable. Tamat Berhad would most likely need to acquire additional raw materials or items from vendors as sales expand. As a result, we should expect the accounts payable balance to the rise in proportion into the growth in sales. The firm will need to get resources to sustain sales growth, which will result in greater trade credit from suppliers, which will be recorded in the accounts payable balance. Accounts receivable. Although the firm now makes almost all of its sales on credit, the unexpected surge in revenues may have an impact on the collection period for account receivable. We should expect the collection period for account receivable to shorten because half of the new business will be paid in cash. Customers will pay their outstanding bills more promptly as a consequence, lowering the accounts receivable amount. Accruals, wage. Assuming no changes in the company's operation other than purchasing resources to support sales growth, the sales campaign is unlikely to have substantial influence on accruals connected to salary. As a result, we may expect accruals wage balance to stay reasonably steady. Inventory. Tamat Berhad would need to maintain larger inventory levels to match the predicted rise in sales. As a result, we may expect the inventory balance to rise proportionately or less proportionately to the growth in revenues. This presupposes that the corporation will manage its inventory efficiency, avoiding excessive stockpiling or stockouts. Gross fixed assets. Other than obtaining the resources required to sustain sales growth, no modification to the company's operation are anticipated. As a result, we should expect the gross fixed asset balance to stay constant. Debt. Assuming that any additional cash required to sustain sales growth is borrowed, we may expect the debt balance to rise. Tamat Berhad will get the money needed to finance the expansion and maintain seamless operation during the sales campaign. Accumulated depreciation. Because no changes to the company's operations are expected, the accumulated depreciation balance will continue to rise due to the existing depreciation rules and the passage of time. Equity. The equity balance will stay steady assuming no fresh capital infusion or dividend. However, if the firm decides to obtain additional cash through equity financing to support sales growth, the equity balance may rise in response. By taking these acceptable planning assumptions into account, we can better predict the possible impact on Tamat Berhad balance sheet line item as the firm prepares for next year's financial plan.
Hi everyone, happy to meet you all. I am Kaleji from Dream Venture and I will present the third question today. The following are the important details we extracted from the question. 40% of sales are cash in Kaki Berhad and are collected in the month of the sale. 60% of sales are on credit and are collected in the month following the sale. Kaki Berhad purchases merchandise 1 month in advance of sales. Cost of goods sold is 70% of sales. The suppliers are paid 1 month after the purchase. General and administration expenses are 6,750 per month. Interest payments are 200 ringgit per month. And beginning cash balance on September is 10,000 ringgit. To calculate total cash inflow in September, we need to know cash sales. cash sales for September is 40% of September sales forecast. The value is 8,000. The amount of collection from the month of August is 60% of August sales forecast. That will be 30,000. So the total cash inflow is 8,000 plus with 30,000 where equals to 38,000. Purchases in October is equal to COGS for October 6. 70% out of 10,000 will be 7,000. Adding in the payments to supplier with general, admin expenses and interest will be the total disbursements amount. So 7,000 plus with 6,750 plus with 200 will be 13,950. Ending cash balance of the month of November can be calculated using the following formula. Adding in net cash flow with the beginning cash balance of previous month. So 22,000 plus with 23,050 will be 45,150. Here is the completed sales forecast and cash budget table for Kaki Lima Berhad for your references. Hope you all enjoy our presentation today. On behalf of Dream Venture, I would like to seize this moment to wholeheartedly express our profound appreciation to UTM Space, Dr. L, Prof. Jerome for their invaluable guidance and support throughout our class on corporate finance. Their unwavering dedication and expertise, especially Prof. Jerome, has been instrumental in giving us in-depth and comprehensive understanding on this subject. Thank you again. We are truly grateful.